Steve Miller, Ask Slim. Steve, welcome back. I always look forward to having a conversation with you. I think your work is excellent. How are you?
Thank you. I'm great. I'm glad to be here, and I always look forward to being here.
And great call in silver. You said it was going to be one of the best trades of the year, and you were spot on.
Hmm.
Tremendous move in silver. How about your initial reaction? I know you're much more of a technician, but does today's CPI confirm some of the work that you're doing currently?
Actually, it does. Of course, it's just a 1 day,
Yeah.
one number event. So, I mean, the markets are excited about it. It is pretty much in line with what I'm expecting as far as the movements in a lot of the markets go and the correlations that I look at. So, it's not a surprise to me that we're getting the move we are getting today in the markets. And uh, when I look at a bigger picture than just looking at a number like today, and I was listening to you guys discuss this, I'm quite negative on the dollar. And
Okay.
if you just look at the way that the dominoes tip, lower interest rates, which I'm expecting, even though I don't expect the Fed to be that accommodative now, I'm expecting the markets will push their hand. So lower interest rates, which I expect, are going to bring a falling dollar. It's going to bring conditions that are, better for commodities going forward, though I'm not really bullish on gold and silver for the short term right now.
Okay.
But
Interesting.
overall, I'm looking for, a weaker dollar and for a peak in the stock market to come very soon.
Well,
And
you can share your screen, Stephen. I'd like to get to TLT because it bottomed about 2 weeks ago after two like almost failed auctions.
uh-huh.
And the market came back and we got back to 92, and then they tried to trash it again after the NFP. And this TLT chart looks very bullish to me that we could be trading, above par.
Can
I
you see
think
the
a qual
TLT chart? I want to make sure it's up now.
it is.
Okay, good.
Okay.
So what I'm looking at here for those people that have not seen our work before is cycle analysis. I have
Yeah.
a weekly chart on the left and a daily chart on the right. What cycle analysis is looking at money flows, rhythms in the market that reoccur on a regular basis. You can see in here that those semicircles in the bottom create harmonics. That's money movement, harmonics, just like actually in music. And you can see this one right in here. That's that dotted one right there
Yeah.
that made a bottom right at that point. That put it in a rising phase right over here. This is our momentum indicator, which is the reversal scout, and that's pointing to the upside also. So TLT to me on the weekly is in a rising phase and early. So my upside projections on a conservative level would be 95 and a quarter, though pretty likely to get up to 97.60. When you get a formation like this with a higher bottom that holds above
Right.
the 78.6, then the probabilities of actually testing the last high up over 100 are about 70%. So
Right.
this is a
Nice.
bullish scenario for TLT. And I'll show you the opposite of that when I look at like the 10-year yields very quickly. This is the daily chart also. So you can see that same bullish formation on the daily chart and pointing to this is the buy zone that we've had in there. So you can see right into the buy zone. Now it's having this uptick today. I'm not sure that it won't have one more dip down in there in the next few days, but basically you can see this formation is pointing to the upside. On the bottom, you can see this is called the slim ribbon PO, and this is the slim ribbon momentum indicator, and that has turned green, so that's positive. So in TLT, you have conditions that are positive in both the weekly and the daily. If I switch over just to the 10-year yields really quickly, I think that you're going to see the inverse situation right over
Right.
here. This is a breakdown on the weekly chart right there. This is a breakdown on the daily chart. You could see that we were pointing before today for this to come down, yield projections down to 4.26, potentially down to 41.5 just in this next couple of weeks. And you can see in here on the bigger picture, yields pointing down to about under 4%. So this is certainly going to push the Fed's hand. The dates right over here are out into September on this pattern. And I'll blow this up so you can see the remarkable movements in here as the cyclical patterns dictate this incredible rhythmic action in here. And once you get this breakdown right here, it points to the downside, and that says that it's going to fall through September. So you have rates falling through September, you have treasuries likely rallying up through September, and a condition that is not favorable at all to the dollar, certainly.
Okay, so with all of that going on, you did mention there's a couple things that come to mind for me. That short term, you're not bullish. Gold and silver, I'm sure it has something to do with your cycle work, because fundamentally the conditions of a weaker dollar and lower yields would be a tailwind for gold and silver.
That is correct. And that would normally you would see, and I'm going to keep the side by side up right over here so that you can see these beautiful harmonics that are in here. So right here, this is important. You can see that, I'll blow this up a little bit more. Our reversal scout has turned down. So that says that there is significant change in the momentum, which is negative. This is where the minor cycle is, right over here. And it rallied. Now, the probabilities of taking off that high were better than 70%, but getting down back to this level is negative. What that says is that even though gold could rally up here to 2360 to 2395, that it would very likely turn down again. We're looking for tests below this level of 2283 or potentially down to this dominant 38%, which is around 2200, 2210. So this is all this corrective period out over here into the summertime. Now, if you look here on the daily chart, these remarkable periods of correction in here where these yellow zones are in these harmonics, and you can see each one of these right here and here and here push to the downside. So we're in one of those right now. So it's getting up today into these minor resistances. Very likely it will fail. You see momentum here has turned negative right over there. The slim ribbon turned negative right here. That says that the rally we're getting today in the gold market, and you can see it's similar in the silver market, is likely going to fail, and you will see a movement back to the downside. So here's silver. It happens to be more positive. You can see the momentum is still positive in there. So I've been believing that the silver gold ratio is going to favor silver for some period of time in here.
Right.
I heard you guys talking about a flag being formed in here. However, cyclically, this flag is already in a failure mode, and it's likely to continue down here until early July. So you could see this minor cycle. Whoops, didn't mean to do that. That's
around
this
$27.
Yeah, this minor cycle right in here, and then the rally that tested it and made that double top, and now pointing down. So this is 2740, 4050, something like that. That's really where I expect this to come down to in the next couple of weeks. Now, I'm long silver. I'm buyer of silver. I've made no secret that I'm long a lot of silver miners. I'm going to be a continued buyer. So you can see that this period over here is likely going to bring you another rally. Once you get into this rising phase right there, that equates to this period up here where I think you could potentially get back up close to $30, $31 out into the summer. So this to me is going to be a buying opportunity. But in the short term, I don't really love silver just because I think it's in a corrective mode.
You know, that's interesting because we're going to have a negative dollar into September and falling yields. And this is going to have people wrong-footed buying dips and buying gold and silver prematurely because of those two correlations that are going to disconnect.
Yeah, but I think that you will see attempted rallies in these metals markets. I just don't think the consolidation period has ended yet. And I'm a super bull. I mean, everybody who follows me knows that. And I'm certainly not a doomsayer. I'm not a gold bug. I've never been that. I just follow agnostically whatever the patterns tell me. And I'm a super bull believing that, looking at monthly charts, that we're going to see much, much higher prices in metals and gold easily into the plus 3,000 area. And I even made a call that there's going to be some time in coming years where the price of gold and the S&P 500 cross.
Interesting.
So that's going to be
Okay.
during a period of a stock market bear market, which
Yeah.
is out there.
Okay. Well, we're in nosebleed territory here, Steve, and
In the stock
you
market?
know, yeah. So and I follow, I watch some of your work, okay, on YouTube. So
Uh-huh.
I'm a fan, all right, and I'm trying to learn from you.
Mhm.
And you called the last correction that we had into April pretty good.
Yeah, in
And
fact, we
then
were looking for 5.3 to 8% decline. It was 5.9%.
and we never got that after the bounce, never got that one more flush. We
One
just
more
blew
dip I
the
was looking for in here, and
me
that did
too.
not come. Yeah.
Me too. So
So that you see
here,
that low right over there is a little bit to the left side of what the ideal was.
yeah,
So that was, but it was still fantastic. And now, our projections have been 5,400 to 550 up over here,
yeah.
potentially stopping at 5,450 because there's a monthly resistance right over there. The problem is, and you said nosebleed area. Well, I mean, if you look at the Wilshire valuation based on the Buffett indicator, if you believe in that at all, we're right now this morning at about 190% as the relationship of the market cap to GDP. Well, there's only been one other time you've been that high, and that was, of course, at the top of the bull market here. But earnings have increased, and so this number was 199%. We're at about 190% right over here. And if you think about what happened in the comparative period of the dot-com bubble back in the
Yeah.
beginning of 2000, that was 157% valuation to GDP. So the valuations now are beyond anything that you would expect to happen. And a normalization would bring it down probably by about a third of its value. Again, I'm not a super bear. I'm not a super bull. I just do what the markets tell me. And right now, they're pointing to the upside, but something is changing. And I made a point of this last week. You can see here on the daily chart, I'm just going to blow this up on the S&P 500. As we project up here, it's running up the top of what we call the slim cloud right there. So that's positive, as you can see there. When you look at the NASDAQ NDX, of course, that's even stronger right over here. And look at this to bring the charts up. And there you can see running up here, and we've got it projected up there to 19,400 approximately in this move. Now you see these bullish formations in here, but what's going to keep this market going when you need to have a rotation into the broad market, but you have negative breadth and a breakdown in the Russell? So you've got a
Okay.
situation in here, even though the Russell is going to be up 50 points this morning, you can
Yeah.
see these resistances. So the Russell is going to be up around 2075, which brings it above into this upper area here. To me, this is a sell on this rally in the Russell. And this is, of course, the Russell responds well to declining interest rates because they're all zombie stocks and have to borrow tons of money. So you're getting this pop here, but this is a bad breakdown, and pretty likely that this rally that we're getting is going to bring it up into this area and actually up near that 78.6, which I don't even have in there, which is a place to me where the Russell is a sell. So Russell in much worse shape than the rest of the market, as you can see here.
Good.
And I would, I take this as a negative. The breadth has been absolutely horrible. And this is one of the most top-heavy markets that we have ever seen, with very poor breadth and the market being moved up by these mega caps, high caps. It's going to need significant improvement in breadth to change this and to repair the situation. And still, we're looking at massively high valuations. So the stock
Okay.
market risk rewards are horrible.
Okay. So is it going to last until September? I think that was your original call that the cycles were positive going into the fall
Yes,
or
I
right
actually
before the
believe
fall.
I believe there'll be a corrective period over here into the summer. This is the weekly chart on the S&P 500 now. I'm following the harmonics in here, which have been fantastic. So some kind of a corrective period out into here into the summer, and then that next rising phase out over here, which takes you out into the fall, right over here. And what that does is set up a, in my opinion, a negative fourth quarter out over there. So when I look at the
Okay.
monthly charts, that still tells me the same thing. So this to me feels like we're going to establish a range sometime. Let's just call it 54.5 to 5,500 with a potential back down here into the 5,100s sometime over these next few months. And then getting into a much riskier period after that. Now, one important thing to say is that, the Fed, and I said they're going to be stingy in here, even though the markets are going to likely be pricing in lower rates. The problem is that how can the Fed cut rates at all-time highs? Inflation's still hot, employment is still hot, employment wage growth still strong. Little blips in numbers don't make a difference. The only way that the Fed cuts rates in any significant way, other than just, some way to join the other markets, the other central banks,
Yeah.
for one or two cuts, just symbolically, the only way a significant rate cut comes is if the stock market is getting hit hard. That's the only way. So I actually think that the Fed is going to be enticed to cut rates in the fourth quarter when the stock market really is starting to come down and give a lot of ground up. And that could be a very sizable decline or the beginning of a major peaking. I believe that we were setting into a secular bear market that will last for a very, very long period of time. And that happens when you get to very excessive valuations. You can go, of course, look in the 1930s. You can look at the 1970s. They're pretty comparable periods to now, where you got into periods of good, strong bull markets, big negative bear markets, and some pretty wide ranges that you traded in, with declines of 33 to 50-something% in the stock market. So that's pretty
Oh,
normal. And
okay.
I think that's coming.
All right. I wanted to ask you if you would consider the surprise would be everyone's looking for the market to be okay until just before the election. Even amateurs like my
Mhm.
sister, she's going to get out before the election. Okay. So, all right. And she's all right, John Q. Public. So everyone thinks it's going to be okay to be long until the fall, and then we're going to have a sell-off. Wouldn't it catch a lot of people by surprise if your summer correction turned into something more than a
Yeah, so
correction, and then we rally back into the election after a pretty good decline that's going to shake out people that wanted to wait until October?
So the markets will tell me if that's the case. So
Okay.
this decline right over here, and I'm just going to take this line, if it got down to what is around the 78.6%, let's say close to 5,000 right over here,
Yeah,
that would warn me that the next rally would be deficient and it would look something like this. So it would come up, not make the highs,
I
and then
see.
get into the period of, I'm just putting in a
Yeah.
variation in here of a larger decline out over here. So that's this, the market will tell me when that happens by the depth of this decline, by the conditions
Got you.
in the market. Our reversal, Scott, will turn negative. It will tell me that the longer term conditions are turning negative. That which supports the upside move will be dissipating. The market will tell me that. Our indicators will tell me that. I'm just going to quickly go to this is my website over here. I thought I had the ability to, let me just
It's okay that you're showing that now.
this what this will tell me, and you can see our reversal scout right over here in the indexes, what the conditions are. So it'll
Yeah.
be in the intermediate term. This is one of our apps, And you can see in
Okay.
here, S&P 500, QQQ, very bullish. You can get notified when these change. IWM is neutral as that's changed on the intermediate term, and the diamonds are neutral. So you can see which of these markets are in better or worse shape. And if I look at the short term here, you can see IWM has been bearish right over there, and you have this very bullish. You could, by the way, note Apple is very bullish, and it's been that
Yeah.
way. So
Yeah.
this is one of our applications in here that's very helpful for our members. You can look at it as on a trader mode based on what type of a trader you are, or you can look in the time frames here at a 2 hour or daily, or if you look at the monthlies in here, you could see the monthlies are all super positive as they have been. So this is a great application that you can really be able to see our indicators as you look at that. So I just wanted to show that I'm looking at it on the charts, but we have it all built into our system. So.
Okay. You get a lot of tools when you're working with Steve. And Steve, do you have any trials or where people could take a look?
Yeah,
Or
if you look right, there's a couple things. For if you want to be a free member, where you get our S&P analysis every single day, it'll be just on the S&P 500. This is our snapshot light, we call it. Just put your name
okay.
and email address in here, and you'll really start to learn about the things that we do. If you want to, there's only another week of this left to see up on the top. This is our full membership, which is normally 159 a month. You get everything that we do, including over 1,000 videos that I and my team have produced, with about 300 evergreen videos that you can really learn about the markets and our style for just 99 bucks. It's non-recurring. So it's best if you use this on the Thinkorswim platform, but still you get all of our important stuff, including our market condition monitor, which is just an amazing application. So just click learn more and you'll be able to learn more about it and sign up. So you can either go to the full level 4 membership up here, or you can get free stuff right over here by signing up for the S&P 500 analysis.
Steve, I put out a tweet to get people to come to watch your elite technical work. And you also have a great communication skill of explaining complicated things in a simple manner so people could get it. Always consider it added value anytime you show up to talk to us, Steve. And
Well, really
want to
appreciate
thank you
that.
for it.
Yeah.
Yes. So I'm a fan. When you were trading on the floor, Steve, where did you live in Chicago?
It I lived in Glenview
Okay.
and most of almost at fully there, and also in Lake Forest for a while too.
Oh, okay. Yeah, I
Yeah.
grew up in Skokie. So,
Well, I
any
my family was from Skokie, so
okay. So, Steve and I have a few things in common,
yeah,
and really appreciate Steve's giving spirit to come out here
yeah,
and share it.
appreciate
And
that.
he's got a great YouTube channel. So, he's part of my intelligence gathering.
Yeah, that's
How
great.
about that?
Just in case you didn't know this, based on how long I've been at this, May 20th, just less than a
Yeah.
month ago, was my 50-year anniversary as a member of the CBOE and a trader. So I've been at this 50 years.
Okay. Yeah.
Mind-boggling.
Okay. Yeah. I think, yeah, it's going to be close. I'm almost there, Steve. I think I
Yeah.
started as a runner on the CME floor in '75.
So you're very close to me.
Yeah, so guys, take advantage of being able to learn from dinosaurs.
Yeah.
We have a leg in the tar pit.
All right.
Okay.
You got
All
it.
right. So, Steve, thanks,
I
man. Good
always
hunting.
glad to be here. Take care.
I'll get in touch with you. Talk to you late summer or fall.
All right. Super.
Steve Miller, everyone, follow him on X at Ask Slim. How much do you weigh?
I'm down to about 224.
Okay, so he's getting slimmer. So that should be easier to remember his handle. And
All
that's a
right.
wrap, everyone.
Take
Thanks,
care.
Steve.
Bye-bye.
And you could join the team, everyone, in about 18 minutes on the Morning Edge. Good luck today. Um, Yeah, I'm concur with a lot of things Steve said. So I'll see everyone tomorrow. And remember, don't just count your pips, count your blessings. Adios, everyone. Have a great trading day. Thank you again, Steve. People are thanking you. And adios, everyone. Bye bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.